They should upgrade the building.
Listen, guys. Okay. Last time we did the percentage discount granted to accounts receivable and also GST paid. Yes. Then part C, what we have to do is cash paid to accounts payable. Right? Right. So during the year, the fourth bullet point, please read. Accounts payable decreased by 127,100, including a settlement discount of 1,400. Right? So that means, guys, how much has been received from accounts payable? Sorry, how much has been paid to accounts payable? And also there were no purchase returns during the year. Right? So how much was the cash paid to accounts payable? Yeah, 127, 400, no, 127, 100 is page number 7, 6 and 7. Right. And then we have paid 1,400, yes. Sorry, we have received discount 1,400. So how much is the cash paid?
Including the discount though, so then they would only
Yeah. Now see, listen. 127, 100, including a settlement discount, yes?
also this is
Yes, so accounts payable decreased by how much? 127, 100, yes? Including a settlement discount of 1,400. Yep. So that means, what is it? Yep. So this 127, 100, does it include the discount revenue? Yeah, does it include this 1,400? No, 1,400. Is it inclusive? Sorry, 127, 100. Is it inclusive 1,400? Yes. Yes, it is inclusive. Yes, then we have to take away to calculate the actual cash paid to the accounts payable. Right? So 126. Sorry. Not 126. 125. 700 is the cash paid to accounts payable. Right? Okay, guys, then shall we start the cash flow statement? Okay, so opening bank balance was 30,000. And then second bullet point, all sales and purchases are made on credit. And then we calculated, no, we didn't calculate actually, we were given. This is from accounts receivable. How much was it, guys? 172. And then and a discount 1720 was incurred. So that means this 1720, 170 to 80, does it include the discount? Does it include the discount, or is it the net cash we received? Net cash received, yes. So then we write here. If you want, you can inflows and outflows you can report separately, but you don't have to. Right. I think we have only one in cash inflow. Then outflows would be the rest. If you want, we can start from the receipts from payments to accounts payable. No.
What's the digit, sir?
Which one?
Receipts to accounts payable?
172.80. You can't see?
No, I forgot my glasses.
Okay. Next one is, guys, we record GST paid 2,420.
For which makes it, you actually have the less or minus sign.
For which one?
It's like outflows, you know how the income statement, you have to have less or you have to have a minus sign for
Yep.
negative on outflow.
Yep.
Do you have to do the same for cash flow or do you just put in?
No, cash flow we can use the brackets. So usually what I would do is I use the brackets. Christian, you have to take it down. You don't have the book? Yeah. Yep. Right. Next one is, guys, loan for 15,000 was taken out. Then what's the entry for this one? Loan 15,000 was taken out from QC Finance. Yeah. What should we do? Sorry? Inflow in financing. And it was used to purchase display cabinet worth of 8,000 plus GST. Yep. So then 8,000, what will happen, guys? Come again? Outflow in financing. Any other? Investing, yes. Yep.
Wait. You just wrote it. So you haven't read right.
Oh, no, that's fine. Or you can say payments to display cabinets, whatever it is.
I forgot.
Then owner contributed capital 10,000 in cash and a computer valued 5,000. So what should we do? Financing info, capital contribution. How much? What happened to the 5,000? Investing. Inflow in investing. Any other?
What is that? Say Q.
Capital contribution.
No, Q as
Finance company.
Q as.
Yeah, so what happens to the 5,000, guys? It's not cash. So do we record it here? No. We don't record it here, okay? Why? Because it's not cash. Right?
Just display.
Yeah, if you can't see down, can you come please here? Yeah. Right. The next one, payment was made to the ATO to settle the GST liability owing at the start of the period. So how much was owing at the start of the period? 1100, yes. So then what will happen to that? GST settlement. GST settlement 1100. And then inventory write down 1000. Yeah, where do we record it? Christian, where do we record inventory write down 1000?
Nowhere.
Sorry? No, yeah. Okay, why not? It's not cash, yes? Yeah, I asked him, I asked Christian. He was going to tell me the place, yes? No. Okay. Right. Right. 13500 was withdrawn by the owner for private use. Then what will happen? 13500 becomes drawings. And it's a payment within brackets. Right. Wages 34500. The following expenses were paid. 34500 wages. Then rent. Sorry, admin expenses. 1000 because it was including GST, yes? Yeah, 1000 plus GST. Rent 11,000. Yeah, that went off. Give me a minute.
So sweaty it is.
We'll open the door.
Yeah. There's an aircon outside there, but
Yeah, very good. Yes. Sorry? I think 29. Insurance that was including GST. 4200.
It's disconnecting. Maybe it's due to the heat, I guess.
Yeah. Next one, guys, interest expense 3000. Also, operating out. Yeah. Yeah, basically, guys, that's it, yes.
Is payments to account payable 125,000.
Yeah.
GST paid.
So the total payments coming, guys, 182, 920. And then net cash flows from operations. I'm getting 126, no. Was 640, yes. So a negative value. All right, purchase display cabinets, that's going to be the negative as well, 8,000. And then
For the purchases, like, can you just move that over to like all the way to the level?
no, usually we write in the middle column, then only we write it in there. Yeah. Then
You have to write in the middle one.
yeah, you have right in the middle. Yeah. Then guys, net cash flows from financing activities.
Everything down, so that's.
Yeah. Okay, you have to take it down. 11,500. Yep. And then net increase or decrease in cash position. What do we do, guys? We simplify all these green values. Was it 9,140 negative? Yeah, net decrease, and then the rest will be, what is it? The bank balance at the end, which is 20,860.
That's it. Like, even in the financing activities.
Yep.
You see how in the inflation, you don't have to like do the bracket better on the side. The inflation, and then you write 135
You mean like the total? Yeah, you can do that and answer. That's fine. But doing it or not doing it doesn't really matter, because what they allocate marks is for the net amounts. I did it for this one, for the operating, because it has a lot of items. If you want, we can do that as well. No?
So, just
Yeah.
a quick question.
Yeah.
So you know how like in the standard setback, the balance of accounts payable would decrease including settlement discount?
Yeah.
So even though it says including, that means we like subtract from.
Yes. So the total amount decrease in the accounts payable is that amount. 100. Yes, you have to subtract, because that discount amount, what is it? The discount 1,400 is included in the 127,000.
Okay, so
Yeah.
that's only what we're paying.
Yes, correct. So how much has been paid in cash in net is 125,700.
Wait, Ranga, I have a question. So it was from the school, yeah? And then it was about the statement of account.
Yep.
So.
Account statement of account. Okay.
Yeah, so we're talking about it, and then, but teacher said like, it's related to verifiability instead of faithful representation. And verifiability is the main qualitative record.
Yeah, verifiability is correct. Yeah, verifiability is correct. Yeah. So both are there. Mainly verifiability, yeah, can be. But however, both of them are there. Why? Because it is verified. So then it is, because why? Verifiability is purpose is what? Straightforward person. Because if you look at the definition, so verifiability is it ensures that the reports are faithfully represented at the end, right? So then, mainly verifiability is correct. Because why? Because we are verifiability is mainly on about the source document. Yes, same thing. It is supported by the statement of account, because it refers to the source document references. Yeah. So then, at the end, objective is to faithful representation.
We were talking about the cross-checking mechanism, account, and then like that we just went straight to faithful representation that showing verified lead.
Yeah.
So like,
You mean in our class?
yeah,
Yeah, in the note, I said cross-checking mechanism. Why? Because it is supported by source documents, and then supporting the faithful representation.
so you can say both. I think my keeps them. My keeps them verified.
Yeah, that's fine. Yeah, even I agree with that because mainly it is about the source document. Yes.
Yeah.
Then it is supporting faithful representation because we know that at the end that let's say for accounts payable, it is accurate. So then we are saying in the faithful representation, we are reporting the real world economic events and also they are free from material errors. So that means they are accurate because we are referring to the source document. So in my note, I have given only faithful or both verifiability. Actually, I remember I gave you both this. Okay, guys. Any other questions? Yeah, go.
Toilet stuff.
Okay, I told you. You have to go all the way to the end.
That's not done with this.
Wait, needs to go back to the cash flow.
Yep.
The cash was defined. Oh, it says sports school. This is part D.
Nation other.
Right, right. It should part D.
D?
The other one, the other cash flow, the last game.
Oh, sorry. I have grown up, yes. Yeah, what does it say?
It says vote.
Okay, guys. Now we have to do the remaining theory for the cash flow statement. No?
Sorry, but more legal things to account payable.
Yeah. Give me a minute. Yeah. Others, please read the cash flow cover we did this. We calculated as well as cash flow cover. Cash flow cover we calculated, yes. Yep. And please read this one, cash versus profit. Page number 3 and 4. Okay. You have the tutor, yeah? Okay. If you want me to show it, Punara, which one are you missing?
Just the first, it was just the first.
Yeah.
Yeah, just the first, that's what I. You show, thank you.
You guys, I gave you a job. What did I ask you? Yeah, 3 and 4, yes? Really? Yes, you guys as well. I gave you a job. I gave you a task. What? Oh, really? No, there's another one. Yeah, and the other page.
What's so funny?
Yeah, you copy it. You're behind. Copy it faster
Yes.
rather than talking.
Yeah, sorry, I'm just. What's that number for?
Which one?
126.
What house lots to sales? Actually, they mentioned. What's this? What's the price?
I think I've copied most of everything.
When did I start?
Week 6.
What chapters?
1 to 7.
1 to 7.
Go on.
So everything to recommend use and all the everything on its own into everything. So the situation for bank in every consider Pick up copy of it. That's how you guys were more songs. Spanish was 0.3 year. Yeah, that's 3.7. No, so yeah, this is next. Small stuff.
No, this one goes up and down. So
Yeah,
I don't know why it goes up.
yeah. It's not working for a few days. Was it working last Monday?
Working like this.
Somebody has no,
Because I had my special class in English.
it wasn't working. I had yesterday 2 classes in the morning now.
This is just cold.
Hmm?
It might just been cold outside at the time because it wasn't hot inside. I guess.
What number is that? That's 6 or 1.
No, you don't need that. Now they only work on it.
Was it working on Monday?
Monday. Yeah.
Somebody has marked up on Monday.
Isn't
It's stuck, the thing, the meter. I mean, the what do you call it? No, the operating device is stuck. Huh? Yes. Dom, I gave you a job. Read page number 3 and 4. You guys done reading? Still you need time?
We still copy.
You need time to read? Yeah?
So when do I start reading?
No.
Okay. So what, from where, cash flow cover or strategies and minimizing cash outflows?
Yeah, cash versus profit.
Oh, cash versus profit.
This one.
Cash and profit are different due to the following reasons.
You have to read to yourself. You can't be reading loud.
I thought I meant to read.
What is it, Dom? Stop talking and read.
I thought I meant to read it to.
No, not allowed.
There's actually no AC.
Coming. Yeah, right. You don't feel it? There's something wrong with you. Well,
That's.
Yeah.
how did you survive in the business class? Huh? Yeah, how did you survive in the business class? Or in the one? Yeah, because there's a lot of stuff there.
Yeah.
Also.
Oh.
You have a jump out?
Yes. Is it better or is it this way better? Wait, don't fall out yet. Yeah, this is.
Yeah, next you should close it. Close it. Okay, guys, stand start. Okay. What is it? Cash versus profit. Right? Now, cash and profit, are they the same concept? No. So they are different, yes? So what is cash? Notes and coins, yes, correct, notes and coins, right?
No.
And then cash and profit are completely different concepts, guys. Why? Due to three main reasons, right? Especially in cash flow statement, right? We report cash and also profit is reported in the income statement. So the differences are some cash items are not profit. Okay. So what is profit, guys? Revenues and expenses, right? And then some profit items are not cash, right? And then at the end, there are some items that affect both cash and profit, but by different amounts. Okay, but by different amounts. Okay. Now, what are the cash items that don't affect profit? Capital contribution, loan receipts, receipts from accounts receivable. No, you have to be careful with. I'll explain that.
Drawings.
Cash drawings, GST, yes.
Rent.
No, not rent. Not rent.
Which is a non-current asset.
Purchase of non-current asset in cash.
Sale.
Yes. Sale of non-current asset. Sale of non-current asset, yes. And also there we are going to talk about that in info, which we call as disposal, because there can be profit in there. Right? Profit and or else. Right? Okay. Then the other one is, guys, there are some profit items that don't affect cash. Like what? Discount. Inventory gain, inventory loss, depreciation, inventory write down, fixed asset. Okay. And then the other one is, guys, items that affect both cash and profit, right? But by different amounts. What is the story? Now, credit sales and receipts from accounts receivable. Right?
Like accounts receivable don't pay everything on this.
Yes, exactly. So whatever we sell on credit in a period may not be collected in the same period itself. Okay, let's imagine like this. Now listen carefully. Okay, let's say we make sales, we make credit sales, right, to accounts receivable. Let's say in February, and we were able to collect everything that we sold on credit within February itself from the accounts receivable. My question is still, would the cash receipts from them be equal to the Credit sales.
No.
Why not?
She's on credit cards.
Not credit cards. Yes, it's correct. GST. Let's say we sold 10,000 worth of goods on credit, but when we collect from accounts receivable, what happens? We are collecting it GST. See, so that amount itself is different. Why? Because we are receiving it GST when we receive money from accounts receivable. But when we report credit sales in the income statement, what happens? No GST, yes. No GST is reported in the income statement. So it's not the revenue. But the problem is when we receive money from accounts receivable, we are receiving with GST, right? And then the other one is, guys, yeah. If credit sales are greater than receipts from accounts receivable, then what will happen? The firm will have more profit than cash, and vice versa. Okay. Right. Next one. The other story is cost of sales and cash paid to accounts payable. Cash paid to accounts payable and cash purchase of inventory. Why? Because what is converted to cost of sales is, right? What is it? Product cost or period cost? Or both?
Product cost.
Or product cost included in the sales. Period cost is like all the expenses cost. So product cost.
Product. Sorry? The question is what is converted into cost of sales, product cost or period cost? Period cost.
Product cost.
Product cost.
Yeah, product period cost cost of goods.
Product cost. Yeah, product cost on yes. I just wanted to check your memory. Right? Yeah. So cost of sales is guys, we are comparing against. So cost of sales is the item that is affecting the profit, and cash paid to inventory plus cash paid to accounts payable. We are comparing with the cost of sales, but these two items, cash paid to inventory and accounts payable, are recorded in the cash flow statement. So remember, guys, when you compare cost of sales and cash payments to inventory and accounts payable, you have to compare it as a one, right? Why? Even though there are two items for the cash, but there's only one item for the income statement. Okay. Now, the next one. So this part, guys, cash versus profit concept. Every time you get a question in every VC paper. Okay. Can be 4 marks or can be 2 marks, right? Minimum can be 2. Now this one is coming. Reasons why a business. Let's talk one by one, but it's the same thing. Opposite. Reasons why a business earns a profit while having a net decrease in cash or cash deficit. Yes. So what are those reasons, guys? These are the reasons. So firstly, cash outflows that decrease cash but not expenses. Yes. So why business has made the profit while making a cash deficit, right? And sometimes in VC, I mean, when we do questions, we do it, then you realize they'll say, explain why the business has made the profit while having a net decrease in net cash flows from operating activities. So then you have to stick only to the some items. So then you can't be talking about, loan received or loan paid or cash drawings, things like that. Or purchase of non-current assets in cash. We can't talk about that. Okay. Right. Then the other problem. Do you have to know all of these items? Or you can have only selected items? All of them. Unfortunately, you need to know all of them because in VC they'll tell, right? They'll say except, except they'll give you some conditions. Except payments to except loan repayment or except cash drawings give two other reasons. So that means there are only two other reasons, please. No, three or four. Right? So you must know each and every. So it is very strict now. Make sense? So you must know each and every. Yes.
Is everything real?
Yes, everything is. Yeah. Except two things.
You show.
Depreciation is not there, that's correct. But depreciation, of course, you know. The other thing I didn't include in this, as I told you, there is sale of non-current assets that creates profit or loss on the disposal. Yes, correct. So that's one. I see that. Maybe I have included. Yeah, I didn't see that.
Second.
Yeah. So that those things can be there, and I think depreciation I didn't include. So basically, those are the two. I mean, technically everything is there. Okay. Any questions, guys, with this one? So this point also you should be well aware about. Okay, this one. Revenues that increase profit more than cash, that is trade sales being greater than receipts from accounts receivable, and then the other one, this one, guys, expenses that decrease profit less than cash outflows. So then you have to definitely compare, guys. This is actually quite simple. Trade sales and receipts from accounts receivable, you have only two items, but this one you have three items. You have to compare cost of sales with cash paid to inventory and accounts payable. Sometimes you have only one item.
So could you explain four?
Four?
Yeah, last one.
Yeah, sure. So basically, now what are we talking, guys? Reasons why a business earns a profit while making a net decrease in cash. That means we have made more revenues, right, than cash inflow, right? So then basically what has happened is we have made more revenues, less expenses, while making less cash, right? So then what will happen? Technically, cost of sales, right? So what we are saying is cost of sales as an expense. This is an expense, yes. So expense should be less, right? Lower than the cash paid. So we have made a cash deficit, meaning we have spent more in cash, right? So
Basically paying for last periods.
yeah, maybe. We can be paying for last period, and also we can be paying for the next period. So we are purchasing more right now. Right? If it is accounts payable, you are correct. Maybe probably for the last periods. Otherwise, if we are purchasing inventory in cash, then we can be purchasing in bulks for the next periods. Right? Tevindu, you okay with that?
Yeah.
All right. Okay.
Sir, I highlighted it as well.
Yeah, good. Wonderful. Right. Then, guys, any other questions? Then shall we start the last lesson for Unit 3? Yes, that is.
Last thing, after you was yeah, there's a then was a boss. Well, this is what I really
Yeah, that's where I used to come. Huh?
Maybe two facets.
Right, like, doesn't a bad debt happen when some, you know, customer like the country?
Yep.
Cause that's what happened, that's what came about in one of my last year.
Yep. So people run away with the money.
Yes.
Okay. Now, guys, if you have done unit 2 in accounting, yes, we have done bad debts. Yes. Get someone out it said that bad debts. What's bad debts, guys? Not good debts. What is bad debt?
Run away.
Yes.
No, the cash receiver doesn't settle that. It within the.
Accounts receivable doesn't settle within the period? No.
When
I know. Outside.
settle within the. Doesn't settle. Pretty soon.
It doesn't settle at all.
Oh,
At all. That means you have misunderstood last week. Yeah? Oh, you forward.
Well, that's what I was thinking.
Yes, no. Bad debt means like the debts or the money that you are supposed to receive from your accounts receivable will not be received forever. Right? Forever. Okay? That's a bad, right? So
Well, what if you're receiving like 7 years? Yeah.
yes, of course that's what I was going to tell you. Yeah, it can happen.
Wait, but then how did you record it? Would you record that your receipt from account receivable?
Yeah, that's good. So yeah, that's actually you have to. Okay, that's first of all that his question is not about a cost design, but practically it's even it has happened to me. One of my students, who did pay like to see like he was an international student, he's gone home
What country was he from?
from Dubai. Oh man, or something.
Oh, he went home with the fees, right?
Yeah, he had forgotten actually. I texted him and because he had gone, so he doesn't receive text. So then I had sent him an email. Then finally, after 1 or 2 years, he had seen and he paid good. Yeah.
So that's still a bad debt.
No. So to answer his question, he asked like if you had written off a debt as bad debt and then you are receiving that, right? Then what you have to do is you have to reinstate the accounts receivable. Okay. So there is something for bad debt recovery account, but that's not in your study plan. Okay. So you don't have to worry, and then you are receiving cash. So you debit your bank and pay the accounts receivable. That's it. For my VC, I had it, but not for use. Right. Then guys, yeah, bad debt is that you are not going to receive your debt forever. Why? Because some people have run away with your money or they are deceased, right?
Oh,
They have picked the bucket.
well, they have disappeared.
Yeah.
For example, they disappeared without like a trace,
Yes.
like a false disappearance.
Yeah.
Does that still amount to bad debt?
Yes. You know, pick the bucket test. Yeah. Yeah. So yeah. So sometimes the other reason is what? Bankrupt. Actually, the term bankrupt is wrong. That is slang word. What is the real term is, I mean, they don't use, I mean, for some reason, we just don't know. Yes,
So.
insolvent. How do you know? I told, yeah, insolvent, last year I told, yeah, insolvent. So opposite of insolvent is what? Solvent, meaning all good. But insolvent means bad, bad. I mean, sorry, bankrupt.
And
Okay.
that,
Bankrupt. Bankrupt means nothing to do with the bank. Some people understand, is it to do something with the bank? No, nothing to do with the bank. Okay, bank doesn't do anything. Then who declares bankruptcy?
manager.
You?
The owner.
Yeah. No,
The
The owner.
accountant.
The lawyer. Wait, no.
no. The court.
Oh.
Okay. Court has to decide. And mostly bad. I mean, in Australia, bankruptcy is actually conditional, meaning they give it for like 5 years or 10 years, or as the judge decides. So it's conditional.
What's the criteria for being bankrupt?
Yeah, that means if you in any situation that you can't pay off your debts, and also you don't have any assets. Because if you have assets, they acquire your assets. Otherwise, no.
Like, why if you like recover bankruptcy? Do they take the money there after or?
Why it can be like if you, in case you were going to receive money, from your inheritance or somewhere.
Then it goes to.
Yes. Yeah, but if if you receive the money after the court has decided, then you should be fine.
Yeah.
Because that person can show, see, look, I'm bankrupt, legally he doesn't have the money. And so you have to be careful in the future if you are going to do business with them or anything, make sure that they are not bankrupt. Okay? Yeah. So then you have to check there. Remember that's why we are saying check their credit history. Yes. Yeah, we have done that. Yes, I have practiced it. Okay, guys. So all that is not really important, just for your information. What is important is mainly the double leg, right? And also there is some note for this one. I'll give you later. So today I wanted to actually cover it. That's it. That's the whole purpose of designing this video. And also, trust me, you won't find this detailed explanation anywhere. I haven't seen. You check any school, any private school, any high-end private school or anything. I haven't seen. Even I haven't seen in any other tuition. Right? I design it in such a way that you can understand from A to Z for bad and doubtful debt. If you get anything, any question, you can basically delete. Right. Okay. Now listen, guys. Now you have to listen carefully. Okay. Right. Now the story. Now bad debts, of course you know, but the problem is the doubtful debt. Okay. The doubtful debt. What is doubtful? It's like yellow in the color like this. I mean, if you are driving.
If you're unsure whether you're gonna pay or not.
Yes, correct. I'm sure. Yes, like yellow. Yes. But what do you do when you get yellow while you are driving?
Speed up.
You drive fast.
Speed up.
That's not the definition. Yes. Yeah. Go if it is safe. Yes. Yeah. But yeah. Speed. Okay. All right, guys. In doubtful debt. So the problem is, let's say today we are selling something on credit to an accounts receivable. Then when we sell it today, what do? We report it as a credit sale, and also we report it in the income statement as a revenue, and then also it will be added to the profit. But later, maybe after a couple of months or next year, we come to know this man that we sold inventory on credit today or in this one is bankrupt. Then what will happen, guys? We are going to identify it as an expense only in that period. So then what happens to this month's profit? Wrong, isn't it? Right? This month profit is exaggerated, overstated, and that month's profit in which we identified is understated. So then profit is wrong, isn't it? Profit is wrong, yes, even accounts receivable also they also GST, everything is wrong. GST is okay, right? So other things are wrong. So then, guys, what we do by experience of the accountant or the businesses, what they do is they will allocate a particular percentage in every period of the trade sales as future bad debts. So what I call them doubtful debt is what? Future bad debts or potential bad debts.
It's like superannuation. It's like,
Superannuation? No,
we like take part of your income and put it.
No. That's different. Pranav?
It's nothing related to a student debt.
Student debt. You mean X?
Yeah.
Yeah, it can be, but then the government is the we have treated it as a business. Then government can do. Government can allocate doubtful. Okay.
Yeah.
Well, you are going to get a student debt.
No, when I get older, of course, when I get older,
You are going to report it's going to be a bad debt.
I'm worried.
Okay.
I'm just asking.
Yeah. Yeah, good question. No. All right. Now that's guys doubtful debt. For the doubtful debt, what are we going to do? We are going to provide, right, for the future bad debts. That's what we call as doubtful debts. Okay. All of these entries are going to be relating to that. What we are going to do.
Yes.
Okay. So for the doubtful debt. And then if you ask me, is this doubtful debt supported by any accounting assumptions?
Relevance.
Relevance is an assumption. Period assumption? Accrual basis? Yes, both are correct. So going concern, not really. Mainly those two. After that, if you want to write the third one, it's going concern and going concern also can be depending on the question. Okay. All right. Then guys, the other one. What are the qualitative characteristics? Relevance, yes. Then relevance and faithful representation. So those are the two. Right, I'll give you a note for that one. Okay, guys, now we'll do it together. Any questions? Okay. Right. Now see this one, guys. The double entry. Let's say there is a business that didn't have any allowance for doubtful debt in their business. For the first time, they are going to start a doubtful debt allowance. Right? What's the double entry? The double entry would be?
Debit credits.
Yeah, debit where? Bad debts expense and credit the allowance for doubtful debt. Right? Yes.
What's the date?
Date would be, okay, sorry. Good question. I couldn't tell you. What are we doing there, guys, here? What is this one? Bad and doubtful debt. What adjustment? Balance day adjustment. So what we are doing is balance day adjustment. So when are we doing it? Balance day adjustments? On the last day of the period. Okay? Don't worry, I'll give you the dates. I haven't started. I'll give you the dates. So don't worry.
This is January 31st.
Yeah. Yeah, 31st.
So is that the transferring stuff? Is that balance sheet?
No. Transferring, no. Balance day transferring is not a balance day adjustment.
Wait, so
Okay, what are the balance day adjustments? Yeah. The adjustment or the changes made to the revenues and expenses.
wait, so like if this is
But transferring entry is not a balance day adjustment. Transferring entry, what we do is not an adjusting. Yes, whatever we had, we transfer it to the profit and loss summary. But this one, what are we going to do? We are going to change the revenues and expenses.
so you have first you have a previous adjusted for balance.
No.
And then
We do the adjustments.
you do balance sheet adjustment, then you do the transfer.
So transferring entry is basically done at the end. Okay, guys. Now we debit the bad debts. Bad debts. Bad debt is what is it? An expense account. Yep. An expense account. Right. Allowance for doubtful debt. What kind of a ledger account is that? Negative asset. Correct. Very good. This is a negative asset. So this is the first time that we are coming across a negative asset, or we have come across last year for accumulated depreciation, but we haven't done it for this year. Right? In Unit 2 we did, yes. But this is the first time that we are coming across a negative asset. Yeah? In Unit 3. Okay. Now please read the example, guys.
The credit sales for the portions. Sales for Jim Gallagher, for John, for the fine for 60,000 for city for the song for 10 for January. And then beyond that, this is now. January. It's for 72,000.
Right, how would you define negative? That was the question.
Negative assets.
Yeah, negative assets is the opposite of the asset. So basically we are going to, yeah.
Why
What
do you
is
get
it?
negative assets?
Huh?
Why do you get negative assets?
Yeah, that's how it is. Basically, we are going to lose money.
Wouldn't that, wait, the only asset you could have that could be negative in bank, then that's the bank with that we have a liability. How would you have any assets that negative?
Yes, that's how the by default and like negative revenue. And we had negative revenue, negative honest equity, like that.
Oh, then like assets a balance sheet, maybe something like it.
Actually, we report this one in the balance sheet. Okay, done reading, guys. Do you understand it? Right now, what is it? Jim Gulliver. Gulliver's credit sale is how much? 60,500 including GST. Okay. Right. So that means how much is, do we include the GST, guys?
No.
For credit sales? No. Okay. So how much is the credit sales? 55,000. Good. Sales return is 5,000. Right. The accountant estimated doubtful debts to be 5% of the net credit sales. Right. And as at 31st January, balance of accounts receivable given 72,000. Right. Now, prepare the general journal, ledger, account equation, and etc. Okay. Now, guys, what do we have to do? Now we don't have any amount. We know net credit sales, right? And then we have been given a doubtful debt percentage, right? Which is determined by the business or the accountant or the owner, whoever. Right? Now, guys, remember, this is the formula that we are going to use to calculate the doubtful debt allowance. What is it? The particular doubtful debt percentage, right? Times by the net credit sales. Okay. Most of the time, 99% cases, we are timesing it by the net credit sales. But some questions I have seen, rarely, they are using the accounts receivable balance as well. But doesn't matter, same thing. And you just apply the percentage on whatever the figure. That's it. But in this case, what is the policy, guys? Accountant estimated doubtful debt to be 5% of net credit sales. Okay.
Wait, how can they do accounts receivable? That's right.
Yeah, because from the accounts receivable also you can estimate.
Like last month.
Yeah, maybe last month or maybe at the end of the period. Probably not last month. No point in last month. This period at the end of the year, because what we had last month, sometimes some people might have paid. Yeah, in this period. Okay, guys. Now what do we do? What is the percentage? 5%. How much is the net credit sales? Yes, net credit sales. Anybody who doesn't know? Yes, net credit sales, how much is it, guys? 55,000 is the credit sales. Take away sales returns 5,000. So it is 20,400. Okay. So what's the double entry, guys? Tell me the double entry. Bad debts debit 10. Alas for doubtful debt. Okay, very good. So January 31st. Why is it January 31st, guys? That's the last day of the period. Okay.
So when we register.
Yeah, bad debts 2500 debit.
Then you credit now.
So when was it about? When we will go back, it's back.
Okay, what's the narration, guys?
I'm not confused, like, so, there's a bad debt in a company.
Yeah.
So you, debit the bad debt expense.
Yep.
And then you credit, like, allowance for doubtful debts, like, what is, doubtful debts, like, allowance for doubtful debts?
Sorry, what recorded? What is
Like,
recorded?
what is doubtful debt?
Allowance for doubtful debt, JD, is a negative asset that we will have a carrying balance. So balance will be carried forward to the next period.
Like,
What balance? The balance that we are going to have at the end of the period.
Wait, will it change depending on the?
Yes, change. It will change.
So what if like an actual bad debt?
Yes, we are going to discuss. Don't worry. It's coming to in the future.
Wait, like, do you have this one?
No, in this
Oh,
in the due course, yes. Yeah. JD, you okay?
No.
Okay.
Wait,
Yeah. So
wait, you said it's a negative asset, yeah? So in the balance sheet, like under assets.
yes, we'll have a negative amount. Correct. We are doing that. Under accounts receivable, yes.
What if the actual bad debt is higher than the allowance?
Yes. That is we call actually under provision of bad debts. We are going to treat that. Yeah, we'll see. Okay. Or not yet? Yeah. All right. Yeah, you'll get there, don't worry. All right, guys, then what's the closing balance of the accounts receivable? January 31st. What is it? Balance? 72,000, yes? Right, if you want, we can balance this one as well, accounts receivable.
Oh, no, never mind.
Okay, then allowance for doubtful debt, what will happen, guys? And bad debts, we are debiting January 31st, 2500, saying, yes, saying what? Allowance for doubtful debts, yes. And then we are crediting allowance for doubtful debt, saying bad debts, January 31st. Right. Then what do we do, guys? Last day of the period. Then what do we do? Balance it. Carry forward. Which one? Bad debts or the allowance for doubtful debt? Allowance for doubtful debt. What do we do with the bad debts? Close it to the. Yeah.
Close to the profit and loss.
Close to the profit and loss summary. Very good. So 2500. Then January 31st. P&L summary, yes. 2500.
And then those two.
Yep. Then what do we do before the allowance for doubtful debt?
When the.
P&L summary. P&L summary. Yeah. So bad debts, what do we do, guys? Sorry, the allowance for doubtful debt. We balance it.
And then you put that balance into the adjusted file.
Yes.
All balances, all at scenarios.
Okay. Now what is the impact on the accounting equation, guys? Assets increase. You sure? Accounts receivable? No, not because of the accounts receivable. What is it? Balance sheet because of the entry we did. Decrease, yes. So how does it decrease, guys?
Allowance for doubtful debts.
Yes. Allowance for doubtful debt. Decrease, sorry, increase by increase. How much, guys? 2500. And then liabilities? Liabilities? No effect. And the non equity? Decrease. Why? Yeah, bad debt expense. Increase. Okay. Now JD, balance sheet you asked me, yes? What happens in the balance sheet? We'll have accounts receivable. How much? 72,000. You can put less or minus sign. Allowance for.
Is that expense incurred? That.
No, expense increase. Bad debts expense increase.
Stage five, let's move on now. Glasses.
2500, yep. 69,500.
Increase.
What do you want?
I just want to know what this word is.
Which one?
DH.
Thus.
Thus. Thank you.
Okay.
Thank you.
Okay, guys. Now, any questions?
Right, so basically, like the allowance for doubtful debt, like you minus it from accounts receivable because like you're never gonna get
we are having doubts
Yeah.
about the 2500. So that we are saying, so this 69,500, anybody can tell the term for this? Net accounts receivable. Very good. That's the net accounts receivable. If you want to say, but you don't have to say, right? You don't say anything. Just if somebody wants it.
But you can explain what is the top of that.
It's yeah. Now I have a look at any other questions. You okay, David?
So like, where did they get the percentage from?
Yes. The percentage is taken from. Oh, sorry. Percentage is taken from the accountants or the owners' experience. That depends. So for example, it can be 10%, 2%, you don't.
It's not fair.
Yes, yeah.
You have to have a bad debt loan. Like
As long as you have credit sales, yes. Why? Because anyway, we never know. Why? So they can, I mean, any accounts receivable can go bankrupt. They can run away with the money. You know.
The doubtful debt is like a one before bad debt. You're getting ready for the.
Yeah, remember I told you what my explanation for doubtful debt is future bad debt, so potential, possible debt.
So you said about the money because
Yes, we are allocating some money. We are saying, look, we are not sure. We are telling the users, look, we have 2,500 of debts that we are not sure of. That's good. Yeah, fine.
is that
Okay. Now, I want to explain you actually one thing. It is this balance. You have to understand very well. This one, okay? This balance. What does this balance mean as of February 1st?
We already have 2,500 account, like, we already set 2,500,
Yes, 2,500 for what?
potential future bad debts.
Future potential values, very good. Wonderful. And then same thing guys, for this one as well. What we are reporting in the balance sheet. Because why? Ledger accounts we don't show it to the users. We show the, because if you show our ledger account, they'll go crazy. Right? We are not showing the ledger accounts to our users, but we are showing the report. Yes. What does that 2,500 mean? This 2,500 or the balance sheet 2,500 means that, look, by the 1st of February, we are saying we are not sure of this 2,500 to be collected from accounts receivable. That's it.
so next period will become bad debt.
Yes, it can go bad.
And then debit.
Yeah, don't worry about the next one. Yeah, don't worry about debit credit. Okay, yeah, those will get conflicts.
It's just like in like it's just like forecast.
Yeah, where do debit now? If it go back,
Along
where is it? Debit, yes.
along traffic.
Debit, where is credit? Yes. Okay. All right, guys. Any questions up to now? Don't worry about the future. Yeah? Good? All right. If you have any doubt, tell me. Otherwise, doubts on the doubtful debts, yes?
So what do you mean? Like allowance for bad applicants.
Yeah, that's what I said. Allowance for doubtful debt mean how much we would assume that it can go bad debt from our trade sales in the future. So simple thing is future potential bad debts.
And we have like, we're just getting ready for.
Yes,
the
we are preparing ourselves for that.
About making this.
Yeah, making that allowance. Because remember the example I told you, we say something today on credit, and after ages we realize that this man has gone bankrupt. So then I told you, what is it? Our reports are wrong. Our reports in this period is going to be wrong, and also the future one also going to be wrong. Why? Because we have identified for a profit that we claimed in the past has become an expense now. So then this period's profit will be wrong. that period's profit total because for that period it is even unfair. Why? So it's going to identify. See, basically we are breaching the accrual basis and period assumption. Make sense?
So you
Yeah.
carry that now.
Yeah, we are rather than doing it later. We are adjusting our reports. We are getting prepared for the future losses right now.
Yeah, what if the future losses then happen?
Yeah, that's a good. Yeah. This that's why we are saying like it is a doubtful.
But then if it doesn't happen, then you have to fix the residual.
No, we are not going to fix. It will be automatically adjusted. We are not going to fix. We are not going to come back and fix now.
Does the doubtful debt allowance, like the estimation that is given, does it vary from period to period?
Usually no. It can vary, but in your questions, no. Practical, yes. Okay, guys. Any other things? Yeah. We'll do this one, and then we'll take a break. Okay, guys. Next one. Look at this. 2. Now, what did we do in number 1? We did the allowance for doubtful debt for the first time in a business. Yeah. So it's the first time in the business. But let's say now we are going to the next period. Then it's not the first time anymore. Now it's going to be a subsequent period where we will have a bad debts allowance balance. Sorry, doubtful debt allowance balance. Yeah. Clear? Okay, guys. Now see, subsequent double. Somebody asked me like if you are going to increase it. You asked me, yes. Now this is a double entry. Increasing the allowance for doubtful debt for the next period. How? Read the question, guys. Okay, done. All right. Now what has happened, guys? Our credit sales was 66,000 with GST. That means without GST, how much? 60,000. And then sales return is 5,000. Right? The accountant estimated the doubtful debts to be 5% of net credit sales. Right? And as at the 28th of February, the balance of the accounts receivable before balance adjustments was 82,000. Right. So then, see, as at 1st February 25, the balance of the allowance for doubtful debt was 2,500. That is what we did in January 31st. Yes, becomes the next time balance, right? Okay, now shall we update that one first? This 2,500. What do we do, guys? Yeah, we record it. Allowance for doubtful debt. How much? February 1st. Balance 2,500. Okay. Right. If you want, we can do the accounts receivable as well, but not much difference. January 31st, February. Yep. February 28th. Yep. February 28th. Yep. Balance. Yep. Balance. How much was it? 82,000. Right. Okay, guys. Then, now, what is our net credit sales? Our credit sales is 60,000. Sales return is 5,000. So net credit sales is how much? 61,000. Yes. Sorry. 55,000. Earlier, how much was the net credit sales?
50,000.
50,000. Yes. So now what is happening? Our net credit sales is increasing. As a result, we have increased our doubtful debt as well. Our every time it is 5%. Yes. For every dollar, we are increasing by 5%. This one times by 5%, which is 2,750. Yeah. 2,750. Then what shall we do for 2,750?
Is it 2750 or 27,500?
No, 2,750.
Just,
So when you're
was that zero just written accidentally?
No, this one is actually I put the total 2,750.
So when you record the doubtful debt, would you only increase it by 250?
Yes. Very good. If you understood that, pretty smart. Okay, guys. Now, so why you already did it? I told you, don't worry about the future. Yes. Yes. Okay, guys. Now listen. Because we had allocated already 2,500 last week, right? We are increasing it only by 250. Okay, why? Now we are saying, because why? Nothing has happened to the previous one. Somebody asked me like, oh, are we going to readjust? Yes, you asked me. No. So accordingly, whether we will increase it or decrease it, that's it. But in your study design, we are not decreasing it. Okay, we are not decreasing it.
But what if at one point your bank goes negative and you have a bank overdraft? Is there a way to reverse your doubtful debts back?
No, bank overdraft and doubtful debts are not connected.
No, it's negative after all.
Yeah, bank overdraft, nothing to do with the
Because one, the
balance.
just keep accumulating all the time.
Yeah.
Allows your doubtful debts you have no debt, no bad debt.
Yeah, it will be accumulating, and it will be actually adjusting as well based on the net credit sales. Okay, makes sense? Okay, so then guys, what happened? We had allocated 2,500 already last month, so now we are going to increase only by 250. But I'm going to do it in a different way. Okay? I'm not asking you to compare this 2,750 with this 2,500 here. So you had 2,750, yes? Hold on. Yeah, you had 2,750 yes. I'm not asking you to compare it, guys, with the previous one, which is 2,500, and then don't do this 250. Instead, I have a smart method, easier method, easier rather than easier. It is actually the recommended method by me. Okay, because in the textbook they're asking you to compare these two. If I want, I can show you the textbook, but I don't follow the textbook method. Is Dom any question?
No.
No?
Like,
Okay, all right. Because I'll tell you first this one. Okay, so what we are going to do, guys, now we calculated 2,750 yes. Remember I told you earlier for you to have an eye on these 2,500 yes. 2,500. Now we have it here. Meaning we are not sure about 2,500 when we start the period, but now when we finish the period, we are saying a different story. What is the different story, guys? We are saying not 2,500. We are not sure about how much? 2,750. We are not sure. Meaning, have this 2,750 as the closing balance for the period. You have a closing balance of 2,750 means you will have an opening balance also. How much? 2,750. Make sense? I think I'm running out of space. That's fine. This one will be, please write it here. One line missing. That will be, what is it, guys? March 1st. Opening balance. Okay. Now what we are going to do is, now look at this. Don't do your things, right? Don't be creative at this point, right? And don't jump. Have a look, right? I'm going to balance this. Which side is higher? Debit. Okay, so I'm going to write it and also repeat it here to 750. Now what has happened? There is a gap. 250. What are you going to say for that? We are in the allowance for doubtful debts. Bad debts. What is the date? February 20. Bad debts. Sorry, I didn't write here. Balance, okay? Okay. Now we credited 250 and saying bad debts, guys. What do? Bad debts account will be yes. Yes, Punara. Bad debts accounts. What do? You debit 250. Saying February 28th allowance for doubtful debt. Then what do we do for this 250? You are sending it to the yes profit and loss summary.
Atlas, does it say Atlas?
Sorry?
Atlas, FD, that
FD allowance for doubtful debt.
wasn't super simple. I thought it said Atlas, bad, that.
No, allowance for doubtful debt. Alright, now guys, I have only one question. Do you understand the allowance for doubtful debt account? Yes. Right. Now why I told you, this is what you have to follow in the future until you finish your VC. After VC, you can do anything. I don't think. Why do I say that? Why do I say to follow this method? Because if you are going to do the textbook method, it's going to confuse. Alright? And if you want to be effective 100%, follow this method. Okay? How do I know this? How can I guarantee? Because I have as a student, a few years in VC and then as a student, in the degree, and also 2 years in the masters, and about 20 years as a teacher. About 25, I have I think about 25 or more years as experience with this one. So then you won't go wrong. Trust me. When I was a student, sorry. When I was a student, I have never gone wrong. Actually, I have done even harder ones than this one because in year one it is pretty simple. As I told you, we have validate recovery and blah blah blah. But this one is pretty simple, guys. Follow this. Okay, you won't go. But if you are going to follow textbook method, you might go wrong.
Wait, why?
Yeah, that's because you are going to get confused with the amounts. And you are going to compare. Right? Shall we do the counting equation as well? Anybody who didn't understand the allowance for doubtful debt? If you are going to say, look, I have understood only 25%, more than enough. Right? You will get there when we do more questions. Right? Then guys, what would we do? We had okay, what's the general journal entry? We didn't do it. Yeah, February 28th. What's the general journal entry? Yes. Bad debts, expense, debit. How much? 250. And credit, allowance for doubtful debt. Right. So then you would, what is the narration, guys? We will say increasing the allowance for doubtful debts. Memo, what is it? 120. Yeah. Okay. right? Then what is the accounting equation impact, guys? Assets, yes, assets decreased by how much? 250. Allowance for doubtful debts increase to 50, and liabilities no impact. Owner's equity decrease. Why is that, guys? Bad debts expense increase. That reduces net profit.
Wait, Anna.
Yep.
If you have an accounting equation question, that's like what 3 marks? You only what is the 3 marks for?
Yeah, so you'll get the 3 marks for all the elements.
Yeah, so
All three
one for
elements.
each element.
Yeah.
Does that mean you get the
For no effect, yes.
no, like what if you get the amount wrong? You wrote
Then you don't get the full marks. So if let's say it is one each, let's say your maybe date is wrong or your amount is wrong or something is wrong, you basically get that mark off.
what if you don't include like the so you know you said decrease, what if you don't include which elements are decreased? You still
Yeah, you know, yeah. If you don't have and the all of them, if your answer is incomplete, you don't get that mark. Yeah, accounts receivable, how much is it, guys? 82,000, yes. Less allowance for doubtful debt, 2750. Oh. Okay, guys. We can take a 5 minutes break. Come back quickly.
Don't make it bad. You don't like it, then it comes to. That's really good. Yeah, you put it like that. It's not that good. Oh, no, geez.
Okay. Uh, 66,000 plus GST. Yeah, 66,000 plus GST. Right. Then sales return is 6,000. So how much is the net credit sales, guys? 54,000. Sorry, 60,000. Yeah. Yeah. So net credit sales, how much it is, guys? Net credit sales is 60. 6,000 take away 6,000, yes, which is 60,000. Right, 60,000. Then again 5%, which is 3,000, yes. Right, now what has happened? On 20th March, Jim was informed that his account receivable went bankrupt. Already bankrupt, yes. Over 1100 had declared bankruptcy. They had declared bankrupt. That was decided to be written off as bad debts. Memo 130. Now what is happening? Now we are on 20th March. Have we gone to the last day of the period? No. So then we have to do this one beforehand. Then what's the double entry? That's what I have given you guys. What's the double entry for that? Debit the allowance for doubtful debt, debit the GST clearing, and credit the accounts receivable. Clear? Right.
So what's the date?
Date is, what is the date? Tell me. March 20.
Oh, so we skipped all the way. We skipped a month away.
No, we didn't skip anything.
No, I mean like.
We are doing this one for March. Last one we stopped for February. Yep.
No, it's
Okay, so what's the double entry, guys? You debit the allowance for doubtful debts, right? How much? 1,000. Make sure you take it without GST, right? Then you debit the GST clearing 100 and you create the accounts receivable. When bankrupt, accounts receivable when bankrupt is 100.
Right, bankrupt.
Come again?
It's right, bankrupt.
Yeah, when bankrupt is his name.
Obviously.
when bankrupt is his name.
Yes.
Okay. I just put went right there.
No,
I
no,
thought
no.
it was an error.
No. So that Yep. So what's the narration, guys? What's the narration? Yes, writing off the. Yes. Writing off. Yes, account receivable. Writing off the account receivable when as bad debts. What's the memo? 130.
You know how allowance without debts is a negative asset,
Yes.
and then that's being debited,
Yes.
so that means it's
What happens?
increase of.
Yeah, that basically what is it? So yeah. Okay, now he's asking a question. That's a valid question. Yeah. Can you tell us a question, please?
So allowance without debts isn't negative asset.
Yes.
If it's being
Debited means it is allowance for doubtful debt. What happens to the allowance for doubtful debt?
decrease.
Increase. Very good. Meaning asset is increase. Okay. Anything else? Yes, asset increases. Yeah. Why? Negative is positive, yes? Yeah, then after that? Is that all? What is the overall impact on assets? No. No.
Decrease.
100.
Sorry?
Decrease.
How much?
11.
No.
Increase of.
Assets decrease by 11.
Yeah.
Sorry?
Decrease.
Decrease assets by 1. Correct. This very small. Why? Why? Yeah. Why? Because why, guys? This one negative. Yeah, you guys are correct. Negative asset decreases, meaning asset increase. Right? Negative. Yeah. And then another account receivable. See, account receivable is created. Asset is created, meaning decrease. So overall assets decrease by how much? Yes. Harry? Oh,
So GST.
no, not GST. Yeah. Yeah. Okay. Any questions with this? Now, then shall we record this one in the ledger account, guys?
What is writing off?
Writing off means like we write off. That means we are basically removing it. Accounts receivable. Right?
But we still haven't done the allowance for offers for this period.
Yeah, this period we are doing when? 31st, last day. Don't worry. Okay? We haven't been there, yes? Alright. Then guys, what is happening? Allowance for doubtful debt. Please start with the balance. What's the opening balance? What's the date, guys? March 1st, yes? Opening balance was how much? 2750, yes, as I remember. Right, then what do? We debit the March 20th. What is it? We are saying accounts receivable, very good. Accounts receivable, unfortunately, you have read that man's name. When bankrupt.
When bankrupt.
Yep. Yeah, you have read their name if you know their name. How much is it, guys? 1,000. Okay, that's it for the allowance for doubtful debt account so far. And if you want, we can do the accounts receivable ledger account. Accounts receivable, how much was it, guys? Opening balance 60,000.
Within 40,000 which is
60,000, yes? Yep. March 1st. Balance is 60,000. Right? Then what do we do, guys? You are crediting the accounts receivable, yes? How much? How much are we crediting? 1,100. 1,100, okay? What is the date? March 20, right? Allowance for doubtful debts. Yeah, sorry, plus GST. Slash GST. For doubtful debt slash GST. Clearing. 1,100. Right?
Can you write in a short form?
Yes, in the ledger account we can shorten it because we don't have space to write all of them. Even if you see now see in this one you can see, guys, I have used the entire width of the ledger account. But if you see it in the VC paper, even it is smaller. Okay, then guys, we have record the rest. Sales return is how much? 6,000. Then what do we do with that? March 31st. Sales returns slash GST clearing 6,600. Yes. Then how much was the sales for that period, guys? 66,000. Yes. No. 72,600. No. Yeah, 72,600. Yes. March 31st. Sales slash GST clearing 72,600. Cash receipt was 40,000. Yeah, 40,000, and also there was discount. No discount. Yes. Then you can basically it's a matter of balancing. You can balance it. So this one I'm not really worried about this because these things we have done before. 132,600. So the balance is 0, 0. 7, 9, 8, 8 plus 4, 12. 84,900. The balance. Any questions, guys?
no.
And then you have April 1st.
Yeah, before that. Hold on. Right. Any questions? No. Yeah, all good now? Right. Okay, guys. Then what is happening? Now we calculated the net credit sales. How much? 60,000. 5% of that is 3,000. Yes. Now what are we doing, guys?
Wait, 66.
No, 60,000. Sorry. No, 60,000 was net credit sales. Yes. Yeah. Yeah, net credit sales 60,000. Yes, 5% of that 3,000. Then what do we do with the 3,000, guys? Yes, tell me. 3,000.
Put it at the end of the allowance.
Yes, anybody remembers what we do with 3,000? Yes, Tenu, do you remember?
2 months.
Yes, 3,000. 3,000 is going to be what? Yes, 3,000 is going to be? No. Yeah. So you record in the debit side. What do you say? Bad debts? No. Okay, what did I say? This 3,000, what's the interpretation for the 3,000? No, that 3,000, what is the interpretation? I told you. No, 3,000, remember I told you. Here also I told you emphasize you the same thing. See, at the beginning, what did I tell you? 2,500 is what we started with. What does that mean? Yeah, balance. Yeah, that's the balance. For the next period, meaning, what does that mean? Yeah, what does that mean? 2,500. We are telling the users what? We are telling the users we are not sure about these people. These are not. Same thing, guys. Now the 3,000 is what we calculated based on that percentage. What do we do for the 3,000? We are saying, what is it? 31st balance. So this balance will become the balance for the next period, which is April 1st. Clear? Yeah, is it clear? Yeah, then give me 1 minute, we'll finish this one, and you can go after that. But at least you can have a look. I'll send you the video. All right. So, is this okay? Good, guys? Now, what do we do after that? Yes, it's a matter of balancing. Yes, which side is higher? Yeah, which side? Debit side, 4,000. Right? Then what do we do? There's a gap. What do you do with that gap? This 1,250. Yes. What happens to that 1,250? Bad debt. You credit here 31st and you debit in the bad debts. Right, so then this 2,750 will become the expenses. You are sending it to the P&L summary.
Is that March the first?
31st. 31st.
Okay.
Well, is it 1,250?
Oh, sorry. My bad. 1,250, yes.
I'm not talking about the bottom below, I'm talking about on top of that.
Which one? This one, black one?
No, next door. Oh, that one, we're on 22,
Where is it?
March 30th, is it?
31st.
No, above the 31st.
March 20th.
20.
Right. Does this make sense, guys?
Allowance for bad debts.
Right. What's the impact on the account equation because of the bad debt on 20th?
Wait, we done a journal?
Yeah, general journal, we can write it. So what's the general journal entry, guys? So March 31st. Now, when you are writing in the general journal, do you have to write the date fully? Yes. In the general journal, we have to write it fully, okay? March 31st. What do you say, guys? Yes, what would we say?
Figure down.
Come again? Bad debts? Bad debts? How much? 1,250. And then allowance for doubtful debt. 1250, right? So you can say balance sheet adjustment for bad debts memo
Is it the
131, yes.
Is it in the increase, decrease in effect?
Yes, I'll give it to you that one. Just take down the double entry. Is it clear? Yeah. Sorry? Homework, probably you can try there are 2 questions at the end. You can try. Or maybe you can try the first one, the second one we'll do in the class.
So are we doing the increase, decrease, effect?
Yeah, we are doing. Are you done, guys, with this?
Yeah.
Okay, any questions?
What was the number? No.
131.
So what's the increase? Is it an increase in assets?
No, I'll give you. I haven't done asset. Good. All right. Then, guys, what do we do? Impact on the accounting equation because of the writing off. What will happen? Yes, what assets are going to be affected? Right. So assets, I'm not sure what will happen. So I'll keep it open. So then I would say accounts receivable.
Receivable.
Decrease. How much? 1100. Then allowance for doubtful debt. Also decrease by how much? 1000. I have a question with this. I have a question. What do you mean by? Because you guys didn't ask me. Allowance for doubtful debts decreased by 1000. What does that mean? Now, when we start the period, what did we say? We said the allowance for doubtful debt. We are not sure this one is. We said 2750 is the opening amount. Yes. When we started the period, we said to the users, look, we are not sure about 2750. Right? Now we are saying this 2750 decrease. What does that mean?
Who is this?
I mean, the users of the report. Yeah, is my question valid?
Yeah. Question? What do you mean?
Yeah, so 2750, when we start the period, we say 2750, meaning we are not sure about the 2750, about this 2750, yes. Now we are saying it is decreasing by 1000 as that went bankrupt.
Bad debts.
Yeah.
Yes, actually, bad debt occurred, then as a result, what happens? Yes,
So after that,
decrease. Yeah, meaning?
What, only unsure about.
Very good. Thank you. We are only unsure about the other 1750. Now we don't have any doubts about that 1000. Why? Already good. Right? We don't have a doubt. Don't worry about that 1000. Yeah, we don't have any doubt. Yes, doubt is gone. Make sense?
Yes.
I mean, if somebody, that's a common sense actually. That's what I'm saying is not the accounting. It's a common sense. Yes, like someone who doesn't know accounting, that's what it means. Yeah. So 1000 is good. Right. Okay, guys. Doubtful debt decreased by 1,000. Then, as a result, my overall assets is 100 decrease by 100. On the other hand, liabilities, no effect, decrease, which is GST clearing 100, and then what's the impact on the owner's equity? No. Good. Right. Then what are we doing, guys? The last part, which is the balance sheet. Yes, balance sheet extract. What is happening? Accounts receivable. 84, how much? 84,900, yes. Less allowance for doubtful debt, how much? 3,000, yes. 81.
Current brackets in the balance sheet.
No, you don't use the brackets in the income statement or balance. Cash flow? Yes, you can. Good. Right. Now, what's your understanding about doubtful debts? Any questions? No? Yeah, any questions?
No.
Right. Okay, now you can read the part C.
No. No. So do we start from the credit sales being valuable?
Yep. Part C.
The credit sales being valuable.
So what are we doing here? What do you mean by part C? Part C is actually these are what? All subsequent entries. Right. Number one, we didn't have an allowance for doubtful debt, so we created one. All the other ones from number 2 onwards, they are subsequent. So they are happening afterwards. Yeah, really. Including the question, okay? The double entries and the question.
Yeah.
When it is supported by receipt, does that mean you just have to put nothing on a number, or do you have to put full narration?
You had what the last one? Full?
Like the full narration.
No, not the narration I meant. I meant the double entries. So if you have a receipt, this is how you will. Right? And the remainder, there should be. Otherwise, the next part for the I'm explaining how we are doing it as a one complete one set of double. This one we have two sets. Why? Because we have two sources of income. Right, Eric?
So,
So
yeah.
Yeah.
actually, even now it's better. No sun. Yes.
But still, the aircon is icky.
There is no right one.
What? There was never an aircon in this facility?
That is.
There is just broken.
That's why I said it's iffy. You want to be paying $37.
Do we do the question or just reading it?
No, just answer to it.
Huh?
I just asked you to read. I asked you to read only. Done reading? Okay, guys. Now what is this one? Okay. Part C, what is it? You are receiving. Right now, sometimes, guys, we are not actually as unlucky as before. Yes, we're kind of lucky, right? We are getting at least some part. Yes, we are getting some part from the account receivable. See, earlier what did we do? Fully we write off as the bad debt. Now this one, receiving cash forwarded partially from an account receivable, while remainder of the debt being written off as bad debt. Right? Then, guys, this one you can have in two scenarios. First scenario is that when the account receivable pay you, right, then we will identify it as a cash receipt. That is when you have a receipt. You have been given a receipt, the source document. So then you are reporting it. Why do we report it separately, guys? Because the rule is what? For each source document, what is it? For each source document, we need to have one set of double entry. Then the other part, we are writing it off because we have been given memo, like in this question. Yes, what is happening? The first paragraph is all good. But the second one, what is happening, guys? 25th of April, Jim received a letter from a solicitor that Jim's account receivable, END half solvent.
That's all so named after bankruptcy.
Yes. Half solvent, yes. Who owed 2,200, had declared bankrupt and would only be paying 20 cents of every dollar owed. Receipt 50. Now what is happening? So this man is bankrupt, but still he can pay 20 cents in the dollar he owes. Meaning we are getting 20%. Yes, 20% we are getting. Right. Receipt 51. So what's the double entry for that one, guys? David Bank, how much? No.
Debit bank 500 and
So just checking, where did cash flow 21?
How much? 200? No. How much? 4.
Oh, yeah. Oh, yeah, 1 year. Good, 1 year.
4, yes. Okay. Shall you write it?
Yeah, what's the dates?
Date. What is the date? Tell me.
25th April?
Yep.
April 25th.
Yes, guys. What's the narration?
Received 20.
So what's the receipt number is? Receipt 51, yes?
$1.
Right. Any question with this? No. Then what is happening, guys? Is that all? No. Then what's the remainder? Bad debt, which is 1,760. Yeah, 1,760 will be bad debt. Yes.
Same day?
Yeah, same day. What's the double entry, guys? April 25th. Again, do you have right April 25th? Yes. Right, because it's a separate source document. Yes. What's the double entry then?
So, bad debt.
Debit bad debt. Allowance for doubtful debt.
Allowed for doubtful debt.
How much? 1,600. Then debit. Well, GST clearing. How much? 160. Value credit. Accounts receivable. Yen. They have solvent. Right? How much? 1,760. Good. And then make sure, guys, at the end of the double entry, that it is adding up to, what is it? How much? Accounts receivable is 2,200. Yes. Yeah. Yeah, you don't have to write that one. Yeah. But
I'm in the process of writing it.
just ask you to make sure that it is summing up to 2,200, which is the original debt owed by that man. Okay, guys. Then, yeah, narration. Yes. What's the narration? Yeah, writing off the remainder. Of yen as bad debts. What is it, guys? Memo 140. Memo 140.
Probably Viking gang.
Okay. Any questions? Any questions? Then, guys, finally, what do we have to do? Now we have to do the, yeah, shall we do the ledger accounts first? Okay, you want to start? Right. What's the opening balance? Sorry? 50,000. Balance, sorry, April 1st, yeah. April 1st?
Yeah.
Yes, yeah, go. April 1st. Is it that our date? April 1st? April 1st? Yeah. Balance 50,000. Yep. And then What is it, guys? Credit sales, yes, 75,000 plus GST, which is 82,500. Sales slash GST 82,500. And then sales returns how much? Sorry, this date is April 30th. This one, or before we record that, sorry, before we do the sales return, guys, we'll do that thing. Bank 440, April 25th, 440. And allowance for doubtful debt. Slash GST, yes. How much? 1760.
Yeah. Yes.
1760, yes. Good. Then, sales return, guys, 5,500, yes. What is that date? April 30th. Sales returns slash GST 5,500. Then how much was the remaining cash? 40,000 after a discount of 2,000. Yes. Yeah, go. So what do? Settle 40,000 after a discount of 2,000. So what does that mean? Yeah, how much did we receive? How much did they settle? I mean, 40,000, 42,000, or 38,000? How much? 40,000. Then how much did we receive in cash? 38,000. Good. So that means, guys, so say bank slash, what is it? Bank slash discount expense. Expense 20. Sorry, not 22. 40,000. Yes. Right. Then, guys, we have to balance it. Not for balancing. $8,400. Okay, guys. What's the opening balance for the doubtful debts? 3,000, yes. April 1st. Then we had an entry on the April 25th, yes. What's it? Accounts receivable. Yes. How much was it? No. How much is it, guys? 1,760? No. Sorry? Sorry? Yes, 1,600, not 1,760, okay? Yeah, see, how much did we debit? Only 1,600, yep. Right. Then my question, finally, we have to do the allowance for doubtful debt. How much?
6% times.
Come again?
6% times.
Was it 6%?
Yeah.
Oh yeah, we have increased it. Yes, now see, we have increased it. So our it's really annoying, yeah.
And I'm sometimes scared of that.
It's not scary, it's really annoying. Okay, guys, net credit says how much? 70? No, that's fine, you can leave it. 70,000, yes? Yeah. 70,000 times by 6%, 40? 200. Yeah, net credit says, how did you get it, guys? 75,000. Take away 5,000. Which is 70,000 times by 6% for 200, yes? This is the doubtful debt balance for April. Now, what's the treatment for 4,200, guys? Yes? Negative asset. What's the double entry? What's the double entry? Debit bad debts. Credit 4,200. Is that what you told you? What I told you? No. There is no double entry for 4,200. What's the treatment? Sorry? No. What do you do with the 4,200? Yes, that's the ending costing balance. Yeah, this is a costing balance. No double entry for this, okay? Don't do double entries for this one, wrong. So what are we saying, guys? Yeah, we look in this period we have made a net credit sales of 70,000, right? That's because we sold 75,000 worth of goods on credit. From that 5,000 came return, and then we have net credit sales of 70,000. From that 6% we are not sure to collect next period. That's it. So then how do we express it? For 200 becomes the closing balance for April. Yes, how do we record it? We will say this is the closing balance for 200, April 30th, and then it will have an opening balance for the next period for 200. May 1st. Yeah, clear? Is that clear? Then what do we do? Matter of balancing. So debit side is 50, 800, 50, 800. Then what is it? How much is missing? 2,800. Somebody told me 2,800. That's Varun, yeah? Yeah, correct. So 2,800. What do you do with this one? Credits. Allowance for doubtful debts. In summary, you are transferring to the this bad debt account at the end of the period. Any questions with this? Okay. Now, are you happy with my method?
Yes, you're a good teacher, sir.
Thank you. Yeah. You guys are happy with this method? Yeah. Right. Now, I'm going to show you. Yes, textbook method as I don't like it because then you might use it as well. But I have chosen because that is technically what most of the schools do. I have seen like some people do like my method, but most of the schools do textbook method. Now, if I want you to show this 2800, I can show you how it happens. Okay. Now look at this. Last period, right? That means when we start this period, how much was our estimation for the doubtful debt? Tell me. How much was the estimation? You can tell it by looking at the ledger account. Sorry? 3,000?
Wait, lost?
No, when we start this period, or at the end of the last period, what was our estimation? No, I mean the amount? 3,000. Yeah? 3,000 was our estimation. Now, when we finish this period, what is our estimation now? For 200. That means we have, what have we done? Increase the allowance for doubtful debt by how much? 1,200. That's what we did in the second scenario. Yes, my second example. See, 2A. That's what I did. Yes. Right. See, we had how much? 2,500 became 2,750. By 250, we increased the. That's what I gave you. Yeah. Increasing the allowance for doubtful debt. Yep. Okay. Then now, what is happening is same thing has happened, guys. Where is it? So 3,000 has become 4,200. So that means increased by 1,200. Yes. Then, on the other hand, what happened? In the meantime, see, we wrote off 1,600 as bad debts as well, which is increasing our allowance or the expense. Meaning, makes sense? By 1,600, our expense will increase. That means you are going to add that 1,600 as well. How much is the total? 28 ton. That is what is our bad debt expense.
That's where I can go wrong.
Yes, that's why you can go wrong. Exactly. That's why I'm not asking you to do that. If you want me to show it, in the previous question, also I can show you. See the previous question. What did we do? What was our bad debt expense, guys? How much? 1,250. Yes. How did that happen? 2,750 became 3,000 increased by 250 plus 1,000 bad debt. 1,250. See? Make sense? Good. All right, guys. The final example. After that, I pass the ball to you. You had to do the questions.
Those BC questions.
Yes. VC questions.
Well,
So I told you. This is the last moment I am having the ball with me. I'm passing it on to you. Okay? Ready? Last one. Read the question.
the credit that the dream developers.
Yeah, read it to yourself. Please.
But we get to correct the VC questions together, like once.
No, because it's your turn. Because no, I'm not. I have done my VC. It's your turn to do your VC.
I know that, but like, I mean, like, corrections.
Yep. Let's see. Oh, sorry, I missed something. Thank you, Punar. I have missed the balance sheet.
Oh,
So what should we do, guys? Balance sheet, accounts receivable less. How much? 84,800. And then allowance for doubtful debt. Remember, guys, balance sheet, we can't write the acronyms. We have to write the full version. Allowance for doubtful debt. How much was it? 4,200. Yep. Then 80,600. Yeah, read the part D, including the double entries. Read it.
So, you scroll up, then you look at.
Sorry.
Yeah.
Did you finish the previous ones? Previous formats have you finished? Ledger accounts, yeah?
Yeah, just
Balance sheet.
Is that 600 or?
600.
alright, so let's go back. We're gonna work with. It's. Well, when we start, we'll talk last, is a question.
And maybe 1 minute. This one.
This is not much exactly.
Yes, the exact same question.
Okay, now what has happened, guys? Alright. Now, what is happening is, yes, you are correct. It's the same question. But, yes, except one thing. Sorry?
One.
Yes, combination. Correct.
Two. So I'm not choosing one.
Yes. Now, guys, now if this is going to be what you said, what you observed is correct. It's the same question except one difference. What's the difference, guys? Earlier we had seen two sets of source documents. Yes, we had two source documents. So that we had two sets of double entries as well. But this one, guys, the entire situation is supported by only one source document. So we have write it by only one source document. Okay. Then, right. Shall we do it? Same thing. Then what is happening here, guys? So again, the owner received the letter from solicitor that Ian is bankrupt, however, paying 20 cents in every dollar worth. And Jim decided to write off the remainder as bad debt, memo 140. There's only one memo. No receipt. Okay? Otherwise, you will be given this receipt, then still you have to do the doubtful, the bad debt written off. Then what do we do, guys? What is the date? April 25th. Then what do? We debit the bank. How much?
440.
440. Again, we debit the Allowance for doubtful debt. How much?
Oh.
Correct?
Yeah.
Thank you. Yeah, 1600. Okay, how do you calculate it? I'll show you. From 2200, right? You are calculating 20%. Yes, 440. Then the remainder is 80%, which is 1760. Then what do you do, guys? 1760 you can divide by 1.1 or you can divide by 11, either way, right? Then you'll get 160, which is GST, and then the remainder will be 1600. Okay, that's how you calculate backwards. I mean, the amounts. Okay.
But yeah, three cost references.
Three cost references? Yes. Exactly. So 1600, and also you are debiting GST clearing. How much? 160. All of them you are crediting to 2200. Accounts receivable. Receivable, who is that? Ian. The half. Right. Then, guys, yeah, what's the narration? Yep.
You have to say 20 cents from the dollar, or can you just say 20%?
No, yeah, we can say 20% as well. Right? If you don't want, you can say 20% from Ian and remainder in written off.
Just trying to see. Well, what are those steps?
Receiving 20% from Ian and remainder being written off as bad debts. What is it, memo? 140, yes?
Yeah.
Yeah.
20%.
What about memo 141?
Is it 141 or one? Oh, sorry, 141. Sorry, 141, yes?
And there's two.
Yep.
There's 141.
Wait, 141 says the estimated.
Oh, no.
doubtful debts.
The other one is correct. 140, yes?
Yes, 140.
Okay, then how do we do it, guys, in the ledger account? Yeah, opening balance, I don't know whichever it is. 50,000, yes?
And what's that digit, sir?
Which one?
What's that number?
Memo?
Oh,
140. Do you, this one we call balance? 50,000. And then 25th, sorry, April 1st, this one. April 25th. Yeah, we have three. Bank slash allowance for doubtful debt slash GSTS 3, 2200. The remainder I think should be fine, yes, for the accounts receivable. Then allowance for doubtful debts, guys, how do we do? 3,000 is opening balance. April 1st, yeah. And then you are debiting April 25th. How much? 1600. Accounts receivable. Yeah. And then the remainder is as it is. Net credit sales is, yeah,
Wait.
yeah, sorry.
Accounts receivable here.
Am I too fast? Yeah, so then,
Can I do anything?
What?
I have to go somewhere.
well,
Like
You want to go?
Yeah.
RL.
Yeah.
Okay, yeah, you can go. But you want to wait for a couple of minutes?
No, I don't think it's possible.
Why?
I'll figure that. Fine.
No, wait. This is more important than the house.
Yeah.
Yep. I tell you that I asked you to wait.
Yeah.
Yeah. If he has any problem, ask him to call me. Yeah. Okay, guys. Then. Yep. Then what is the next entry, guys? Yes, Daddy, tell me what is the next entry?
Oh.
Come again? Yeah. What is the final balance? How much is our net credit sales? Yep. Net credit sales how much? Same thing, yes. 70,000. 6%. For 200. What do you do for 200?
Open it and you can transfer.
Yep. April 30th. So balance. Right, 5,800, guys. Right, then what do we do? The remainder we are writing for the bad debts, yes. Bad debts 30th. So you debit credit here and bad debts debit.
Yeah.
So April 30th, allowance for doubtful debts. Then we transfer it to the profit and loss summary. On which date, Pranav? 30th. April 30th. Yep. Done. Okay, Jadi, if you want, you can go. But the questions, at least one you have to try.
Yeah.
But if you want, we can try it for 5 minutes. We are not done, guys. Others are not moving houses, yes. You have to wait. Right? Any questions? Yes. Okay.
Yeah.
Yeah. How do you find this one?
So,
Right. Okay, guys. Then, any questions?
So now do we stop the VC questions now?
Yeah.
Um,
You want to read it or
yeah.
you want to read first? We don't have to do it now. Read it first
Okay.
and tell me your questions, and you can try it once.
The following information.
Read it to yourself.
Oh.
You always forget.
Yes. Because most of.
Yeah, because others are disturbed.
Oh, every other class I take, they make me read it out loud.
No, not here.
This is different. This is the first class that's different. That's why.
Yes. I'm different.
So, Two months.
Okay.
All right.
Okay.
Yeah.
Any questions?
Not until I do it, I don't think I have any questions.
Oh,
oh, sorry.
so do we take this at home or?
Yes. You have to bring it next week, okay?
Yeah, for the recent questions of the homework.
Just try to try out first one. The question number 2, I'll do it. So,
The rest of the thing is cool.
yeah, try question number 1. Question 2 we'll do it in the class. Yeah. You think anybody can tell me the answer for part A? Yeah, can tell me the answer for part A.
How many things?
Well, show me the rest of the thing.
Has there only one total? Debit bank? Debit bank 550. Thanks.
Debit GST clearing 50 and debit account. No,
Debit bank 550 debit. Allows for. Doubtful debts.
yeah.
And I'm crediting the.
Cash to receive.
Correct. Okay, I think it should be fine. Okay. All right, guys. Then thank you. Especially, being in the cold environment,
Very close.
Yeah, very cold. That is good. Yeah, and this.
It's now full.
Yeah.
It's
No, we being cold, just for 3 hours. Yeah, thank you guys for coming. And then hopefully, we are starting. We are starting practice for Unit 3, revision for Unit 3. However, I haven't finished some parts. Yes, remember? I didn't do the indicators. No, yeah, in ethical, yes. There was another part in ethical we are doing next week. He's the one who asked me. We are doing indicators. Please bring the unit. Sorry, Unit 30. Yeah, Unit 13 you have to bring. Okay. Okay, guys, you too. Gutama, bring the Unit 13 next week. Okay.
Okay.
Right. Okay, guys. Thank you.